Zit in chronological order.
Perfect. Let's start. Good morning, everyone, and welcome to our panel, Exchanges as Catalysts, How Platforms Drive Crypto Adoption. In this session, we will explore the evolving role of crypto exchanges from being simple trading venues to becoming multi-service financial institutions, shaping both institutional and retail adoption. Our panelists representing the leading platforms in that industry, each with a unique angle on how exchanges are driving growth, innovation, regulation, and so on. And now, before we dive in, I would like to ask each of you to briefly introduce yourselves. So, Denny, we'll start with you.
Hello, everybody. Happy to be.
Yeah.
1, 2, 3 testing. Okay.
Just keep talking.
You tell me when it's working. I can also just speak very loud if it's needed, but well. Yeah, happy to be back in Dortmund. As some of you might know, we have a good partnership with Bitvavo, so I come here on a regular basis. Denny Morawiak, I'm the managing director for Coinbase in Germany.
Yeah, hi. Marco Bodewein, managing director of Bullish in Germany. We have a regulated entity here in Germany. Bullish itself is focused on institutional grade trading for professionals, institutions, and regulated entities mainly.
Hi, I'm Tomaž, part of the strategic partnership team at Bitstamp by Robinhood. Robinhood recently acquired Bitstamp, which is why the name has changed in the past months. I've been with Bitstamp for the past 8 years, previously in operations and now in strategic partnerships, where we drive the adoption of tokenized assets. We're building a new chain with Robinhood and bringing institutions into crypto.
Hi everybody, my name is Marijn. I'm Chief Marketing and Chief Growth Officer of Bitvavo, centralized exchange from Amsterdam. I lead the brand, marketing, growth and expansion teams at Bitvavo, and I'm super happy to be here. I'm also super happy to see our LED boards around the stadium. Last time I was here was with the semi-finals of the Euro Cup, so it's good to be back.
Perfect. Thank you very much. Let's dive right in and start with a big picture maybe. Let's assume in 5 years, every bank, every asset manager, every exchange or broker will have a crypto offering from the TradFi space. Like, how do you deal with that new kind of competition? What's your role as a crypto native platform in this kind of environment?
I can start, although my mic is not working. So maybe one of you starts while we figure out my mic. Should I come over to you? It's working. Okay.
No, really?
I think it's
not
not
really.
working. 1, 2, 3, 4, 5. Okay, wonderful.
It's working.
Okay. I think we're still so early. Yeah, that would be my overall statement. Yeah, it's so nice to see a gathering here, but you talk to 10 strangers on the street, and every time I do this, it reminds me we are still so early. So I believe it's going to be a massively growing pie. So it's not about competition to fight for a stable pie, but basically contributing, adding to a growing pie. And I think all in all, that's going to be good for everybody in the industry. And what we have to do, we have to focus on customers and make sure we provide the right proposition and the right offering and the right service to our customers.
Yeah, I totally agree. Currently, it's still crypto native driven, I would say. Accessing the rest of the retail world out there will be major for the whole industry, because that's probably the next step for all of us. But not only retail, also institutional money. And this is where crypto is now landing within the next few months, years, due to regulation. We probably will talk a little bit more about regulation later on. And from that point of view, this is probably for us one of the key drivers why we are also, in the meantime, licensed literally all over the world, because this is going to be the driver for the whole industry, getting our products, getting crypto into the institutional world out there and also in the not native crypto retail world.
For some time now, we can observe a convergence between TradFi and crypto native companies. I talked about like the crypto offering from TradFi companies, but on the other way, we're also seeing crypto native platforms offering TradFi products like stocks, ETFs, payment services, and so on. And maybe, of course, tokenized stocks are a very hot topic right now, to mention them. But I ask myself, what's the intention behind this kind of TradFiization of crypto? Like, is it that maybe at some point every crypto provider, service provider is becoming also like a TradFi company? Like, where does it lead us?
Go ahead.
Yeah, sure. Yeah, for sure. So for the tokenization to happen and to tokenized stocks, the goal here is to open these traditional markets to investors who were previously, let's say, guarded from them. You know, they weren't able to invest, and this way they get to own stocks on chain and then move those stocks across, which before wasn't really possible. And just to go back to your previous question, even if banks and asset managers are going to offer crypto, exchanges like us, we are here to drive the price discovery. So they need us to know what the price of the assets will be. They can go for liquidity to, you know, OTC desks, to other providers, but they will still need exchanges to drive this, you know, fair market price discovery of all crypto assets.
And why should, like you talked about access, tokenized stocks are offering an access. But for me as a European investor, I think I have access to most stocks in the world. So it's a naive question, but why should I invest in tokenized stocks and not in the classic product, let's say classic stock?
Well, it offers you more, let's say, fractionalization. You can own less than, let's say, brokers give you limits on the orders or the amounts that you need to invest. And with this, you can also then transfer them to your own wallets and do self-custody if you want to. You know, you don't need to rely on the broker to custody those assets for you. You can do this yourself. So, and then move them across, you know, to other venues who have the same, let's say, chain and trade them there, you know.
Yeah, I think tokenized stock and tokenized securities and stock still need to kind of prove itself as a use case. So the real question is, will it really happen at scale? Will it become available 24/7? I guess a lot of change is needed for that. I think eventually we will go there, but it's still early days for that. And I think in terms of institutional adoption, I think it's only going to make crypto more accessible for everyone. And there's still a lot of untapped retail potential out there that is still hesitant to step in and will feel more comfortable to step in to crypto if it's offered through their well-known platforms and institutions. So that's going to be exciting.
Yeah. You mentioned institutional adoption, and talking about that, what we can see is that the derivatives market is growing rapidly right now. And is it maybe the clearest sign of the institutional adoption that derivatives are becoming that important right now? Is it because retail is like a small part only that it's searching or demanding derivatives on?
Yeah. I'd say yes, yeah. But going back to your point on the convergence of Web3 and TradFi, I believe the average consumer out there doesn't care about blockchain. Yeah, like they don't really care about the technology behind it, right? They care about the usability, the trust, security. So, and that's why I think it's pretty clear that this convergence is happening, right? And that several players, right, are attempting to become like the primary financial account for a consumer out there. And I guess that's going to be an interesting space to watch. It will shape the next couple of years on the retail front. And that's why you see so many players also broadening their offering. But ultimately, I believe it's going to be a combination of having the best user experience and usability and providing the most trust to the user and security. And if you manage to do these two and combine these two, it's an attractive proposition to the average consumer out there.
In the past, it seemed to me that price reactions were mostly retail driven, let's say. Right now we are in a phase maybe where institutions are becoming more and more important for the prices. Is it right now the case that like the all-time high of Bitcoin and Ethereum right now is wrapping up? Is it institutional driven, this kind of price movement?
Yeah.
Go ahead.
I can call it.
Go
Happy
ahead.
to hear your views on that. Well, maybe one observation, right, that you could have made over the last 2 years is that the drawdowns, right, significantly decreased percentage-wise, right? In absolute terms, obviously still very high, and I think that's mostly driven also by institutional money, right? That's not that quick moving in and out. So I think that's one impact that the major inflow of institutions has had on price actions. But curious on hearing your views on that.
Yeah, I would say due to the fact that the institutional demand is growing rapidly, this will bring an impact on prices, especially on our majors, for example. Yeah. Also, the growing number of stable coins now coming out of Europe, for example, is for me kind of the interesting part of where this goes to, because what do we agree on? Do stable coins per se make sense, which is either transforming fiat into a tokenized product, which it is in Europe mainly, right? Compared to the US stable coins, where you have a basket of products the US dollar is invested into. So that's a different approach to what we see in Europe compared to the US. But nevertheless, the big rush will come when the institutional money starts flowing rapidly.
I mean, you're from Bullish, so you have a focus on institutions and professional
Right.
traders. What is the difference mainly when we talk about products, for example, in comparison to the retail exchange? Like where do you differ from?
Well, our product doesn't really differ much from the other professional exchanges. The only difference is that we are coming for retail. We started as a retail exchange, compared to my colleagues here coming more from the retail focus and developing into that institutional business. Why has Bullish focused on institutional business in the first place? Our founders had the idea to set up an institutional grade exchange. All of them have major background from Wall Street. And from that point of view, the whole product development was focused on to serve institutional clients. I mean, my perfect client, if you would ask me, here in Europe, would be the typical old school retail broker, retail bank, which is for us a multiplicator into the old real retail money, right? So we don't have the intention to approach retail directly because we're just not big enough regarding manpower and so on and so forth. But offering a great liquidity pool, we're one of the biggest liquidity providers in the world, and tight spreads. This is actually what enables our clients to make money, even if they use us as an LP.
And talking about now retail adoption, what are the most important products, maybe next to spot trading?
For retail, you mean? I think if you look at the masses, the bell curve of where people are, I think the far majority of retail sits, let's say, in the middle, and they prefer broker and spot exchange products. I think if you go broader to the right, if you look at the more advanced traders that do more volume and are more price sensitive, you gradually move into derivatives and also DEXs, right? So if you look at hyper liquid and their volumes that they already do today, that's quite amazing. And I think on the fringes you will always see advanced traders and pro traders to really look into those edges and go that direction. But the bulk, the mass retail, I think will continue to be served by brokers and retail exchanges.
Okay.
Other opinions, maybe?
Yeah. I just wanted to add that for mass retail, what they need is simplicity, because most of them are, let's say, intimidated, or they don't know exactly what crypto is. And to offer them crypto, you need a simple app or just a trade engine which enables them to invest without much research needed, or the information is provided to them, in a seamless manner, with easy explanations for them to understand, and the safeguards that there are for them to, let's say, protect their investment. So yeah, that's the main thing if you want to approach mass retail in this regard. Plus, offering them a compliant and a regulated exchange for this.
I think speaking on retail adoption observations we have from I said at the beginning we are so early, right? I think still in Germany around, depending what source you look at, but 11 million people own some sort of crypto. In the US, it's north of 50 million, 52 million is the latest number I've heard. But it's not just the number of people, but also the amount of assets per retail user that's much higher. So if you look at the US, I think you have some use cases that point towards already using crypto or a crypto exchange as a primary financial account, using the card to basically also spend. Also going into yield use cases, I think staking, right, is massively important for all players and especially for the users in the industry. So I think it's worth to look at countries where adoption is already a bit higher, such as the US, to see where we're going to. And at the same time, I'd say even in the US, it's still so early. Yeah.
I'm sorry, my voice. I hope my voice is working right now. Okay. I'm sorry. What concrete steps maybe?
Take a break, Sven. Take a break.
Oh, take a few more questions. Maybe I hope it will work at some point. Okay. I would like to talk about competition, and we see like many new players entering the market with Mica, for example. And I would like to know, what are the most important things there for differentiation? Is it low fees, UX? What is like driving that competition, and what is for the next, let's say, next 12 months, what is the most important thing here?
Yeah, if I may, I fully agree with Denny that it's usability and trust. And usability comes down to as little friction as possible to do what you want to do as a retail customer. And on the trust side, I think price also plays a role, right? So we did our own research in 8 European markets. And we looked at what is important from a customer point of view in choosing a platform, but also in what they expect of a platform. And I'll talk about this in my keynote later, but on the top of the list in forced ranking is transparent pricing and not low pricing. And I think that ties into trust. I think it's very important for customers to understand what they are paying for what they are buying. And I think the industry as a whole can still do an effort to kind of make that more transparent for users, so that it's clear what the actual market price is that you should pay and how much commission and fee is going to the broker or exchange.
Yeah, to add to that, I'd say the main differentiation between exchanges, at least what our goal is long-term trust, just to add to your point. So some venues, they add new assets quickly and they chase short-term goals. With us, we are building the long-term trust. We are vetting the assets that we're adding to the exchange. We are, regulatory first, compliance first, and just building the trust. And in the long term, this will, come back, as a good strategy for us, for sure. No short-term goal chasing for us. Just long-term. That's what we are about.
Yeah, I totally agree. I mean, from our point of view, as we serve institutional clients and our retail clients, I totally agree with everything mentioned before. What we see is obviously licensing, as our clients mainly are licensed and want to settle against and trade against the licensed entity as well. Next thing is institutional grade settlement, which is a major role in our field of offering, especially if you talk to banks, brokers out there, they don't really want to pre-fund anymore to offer crypto trading to their clients, to their retail clients. So from that point of view, setting up institutional grade settlement, T+1 as an example, is probably one of the most important drivers for us and our clients. Right after regulation, and from that point of view, it's all broken down in the end to trust, because your counterparts need to trust you, and if you are able to deliver that on the highest level possible, coming from compliance, risk management, you name it, AML, KYC, I think this will be part of the game in the future, which is more important actually, no matter whether you serve retail or institutional.
Talking about the future, if we will see a more progressive DeFi regulation, for example, coming from the US, like, are we headed toward a hybrid model between like the centralized and the decentralized platforms with a DEX offering? Like, what's the future bringing here, do you think? Like, because DeFi is a point right now that is accelerating very fast with regulation. Is it an option, or is it just like something you would say, no, we are different towards the DEX or the DeFi space?
Yeah, there will always be a difference in product offering, for sure. The question is, how much impact will the regulator take, and how many assumptions do we put into our future planning on which way the regulators all over the world, no matter what areas of the world we're talking about, will look at it. For example, we've chosen Germany as our hub for Europe because BaFin here in Germany is the toughest regulator in Europe, right? And coming back to the aforementioned, we want always to be the most trusted exchange and liquidity provider for our clients, and this is why we've chosen the hardest regulator in the world. Same in the US, we're licensed in Hong Kong, in Gibraltar with our exchanges. Whatever the regulation might bring in the future, our job definitely will be to be, if possible, a step ahead and be prepared for whatever is coming. We as a centralized exchange are probably a more relaxed than a decentralized exchange will be in the future, but we will see. I mean, to be honest, it's hard to predict.
Yeah, if I can add,
Yeah.
I believe that operating in a regulatory compliant way and innovating on the product front, they're not necessarily competing. You can have both, right, if you approach it in a smart way. And I think integrating DEXs or DEX features into a centralized exchange is one of those examples, right, where you see that. In the end, we as a company, right, we believe that crypto is the main lever to increase economic freedom. One of like the angles on that is that you have the power over your own decisions, and in the end it's about educating the customer well, right, and giving them the right information to make their own decisions. So what we've rolled out in the US just recently, right, is a DEX integration into the main app, right, by clearly signaling to consumers if they're about to trade an asset that's not part of the centralized exchange, and then providing the necessary information to make an educated decision if you even want to make a trade with that one, yes or no. So yeah, in summary, you always have this discussion between, or the big trade-off between regulation and product innovation, but I believe the mindset has to change, or we take a different mindset that is very much you can have both at the same time. It just requires close coordination and collaboration between the teams.
Mm-hmm. I'm curious here in the audience, maybe, who's like using DEXs instead of centralized exchanges? Maybe we can do a little poll. I will ask you now. So please raise your hands if you used DEXs in the last 12 months, or if you did this. Okay.
And I guess we have to be aware that this audience is typically more crypto native than the general public. So from our own research, we see it's less than 5% of people that trade crypto that have access to or have traded at DEXs. So it's still small because it's still it requires a lot of focus and attention to use it in the
Yeah.
right way, right? So whether it will ever be mainstream depends very much on regulatory forces, I guess, but also the ability to make it usable for the masses. And yeah, that's yet to be seen if that will happen going forward.
Yeah, absolutely. Talking about regulation, maybe we can have a focus there now. And do you feel that crypto companies, especially exchanges, of course, are treated fairly by regulators, or is it sometimes that you have even higher hurdles than TradFi companies, like with MiCA, for example, or transfer of funds regulation? Is it fair? Do you think regulation now is fair with MiCA, or is it like a more protectionistic framework that is quite hard for most participants?
Well, I can go first, yeah. So MiCA brings clarity, right? So finally you have the same set of rules across the EU. With regulatory first approach, exchanges can then quickly adapt and then also grow responsibly, within the MiCA framework. And also, if, let's say, regulated venues, regulated exchanges, even before MiCA, they were prepared, for MiCA, such as ourselves. For example, Bitstamp got its first payment institution license in Luxembourg back in 2016, right? Also, we got the Bit license in New York in 2019. So we were constantly just, talking to the regulators, discussing with them how to have the best approach towards crypto and compliance in general. So we were on the forefront there, and just staying in touch and making sure that we are compliant across the whole, let's say, MiCA acceptance stage. And once this is launched, we were ready. So staying ahead, that's our goal, and just constant communication with the regulator. So I wouldn't say, at least for us, that we are.
Trade isn't a barrier, regulation.
Yeah, of course. Yeah. But it's easy for us. I mean, it's easier for us to say because we were always, in contact with them. So there were no surprises for us, in all those years.
Yeah. But what are the main barriers for adoption, let's say, in Germany and Europe? If it's not regulation, or maybe it is regulation, but what makes it hard here to go to market?
Well, I mean, I can give it a shot. I think overall we've been in a good cycle, right? So we've seen on the retail side and on the institutional side, as I said before, that the pie is growing, and I think that's going to continue. Let's see how cycles will develop. This will have impact on retail action. I think it's interesting to see that despite we are at all-time highs at many of the blue chip coins or close to that, retail interest in some areas is below than what has it been in Q4 2024. So like the hype at the moment is not there. In the end, to me, it comes back to what we've said before. It's usability and trust, right, with these different components. And I think everybody has to figure that out. And in the end, everybody and every TradFi player that's starting to talk about crypto, that's starting to implement crypto, will help with mass and retail adoption. So I think that's something we all welcome.
Yeah, I think the market entry barrier is not so high anymore as it probably was like a couple of years ago. The regulator per se has learned a lot, especially in Germany. If you would have asked me the question like 4 years ago, I would say yes, that's a major barrier, because I mean, the market actually had to educate the regulator. Also, they are the ones actually setting the rules. But this has changed dramatically or massively to our advantage. So from that point of view, as long as you comply, and it's not so hard to comply, because as mentioned earlier, I mean, we have a European regulation now in the crypto space with MiCA. I wouldn't say that TradFi and DeFi are regulated or handled in a different manner from the regulator. So the key definitely is stay close to the regulator, be in close contact with them, ask for advice, always helps. Yeah, give them the impression that you want to work with them and not against them.
Okay. Right now we can see in the US that much trading volume is moving into the Bitcoin and Ether ETFs. Is it maybe a problem in the future if, I mean, for Coinbase it's maybe good because of a custody, of course, but like that the people on the investors, institutional investors, are going for ETFs and not for spot trading, for example? Like, is it a problem or don't you think so?
At Bitvavo, we don't see that as a problem. I think it's, as Denny said, the pie is only growing. It's driving further adoption and acceptance across the general audience and also institutions. So I think it's only helping to grow the pie and to put crypto on the map. And for people that want a little bit more than to own a stock, they are always welcome at a specialized exchange or where you can basically withdraw your assets after you buy them. So that's a big difference, of course. So I think there is something for everyone, both from a retail and institutional point of view, and it just adds to the overall product suite. So we see it as a very welcome addition to the overall world, basically. Yeah.
Okay. Okay. So
I could only echo that. I think what I would add is that what's interesting that we observe if we talk to CFOs or finance professionals that I said earlier, the consumer doesn't care about blockchain, but the CFOs of the world start to care about blockchain, right? That's interesting. Obviously, from a treasury use case, there are more than 200 publicly traded companies that now hold Bitcoin on their balance sheet. This is interesting, right? An interesting evolution. So I think the interest is only going to grow, especially as some of these use cases are much more sticky than the typical retail investors that would just buy something and then maybe trade out of it if price action changes.
I mean, we all agree that competition in the crypto market is increasing. And my question is now, would it lead to more, let's say, M&A deals, for example, that the larger ones are eating the smaller ones at some point? Because there are many exchanges out there. And sometimes I ask myself, are there too many maybe? Do we need maybe less exchanges, less players in the market for the market size right now? Is this something that we will see in the next, let's say, month?
I think, to be honest, as long as the pie keeps growing, then there's still room for many players. But a shakeout or a consolidation is already happening. And what we see now and in the recent years, there's local brokers that basically throw the towel, facing the regulatory hurdles and costs associated with obtaining a MiCA license. There's many brokers that already left the market or sold their business. And then what remains is the bigger players across Europe and internationally that have Europe as a priority. And I guess as long as the market keeps growing, there's still a lot of room for many players. And as the market will cool off or slow down in the future, we might see further consolidation. I think volume matters and scale matters. There's economies of scale in being the largest or biggest exchange, especially in Europe, where you see some directional steering towards European settlement also. So that will also, I guess, drive consolidation going forward. So we already see it today and we will continue to see it in the future.
Well, yeah, consolidation is also a sign of a maturing industry. So it happens in other industries as well. And we are a good example to that. So Robinhood acquired us a few months ago. And the goal here is just to bring, the best value for both retail and institutional clients. Robinhood has a very strong presence in the retail space in the US. We have a good presence in retail and institutions globally. So together we can bring a lot of value to the whole Robinhood ecosystem.
Yeah, and as long as there are companies out there with innovative products, technologies, they always will be in the focus of the big players to add their portfolio and get the best out of the solutions.
And we've done the Deribit acquisition, right, which was volume or acquisition price-wise, I think the largest crypto M&A deal so far. So I agree, there's more to there's more to come. I think one interesting call out I observe is if you do due diligence on a crypto player, because you're on a regulated environment, that's almost the hardest hurdle to pass, right? So a deal might make sense from a business point of view, but then you look at this smaller company that you try to acquire, and there's so many gaps and holes from a regulatory point of view. So maybe if someone is out there building a business with the aim to be acquired at some point in time, I would advise start early, to plan for that. So because a deal might not happen, even if you have a very good business, but if it can't be integrated to fit the compliance standards of a larger player, a regulated player, or a listed player, then it's really, really hard to do.
Now we'll go for a closing question to all panelists here, for them to give an outlook, like where we are in 5 years maybe, and therefore would like to know, what will a crypto exchange look like in 2030, and how will it differ from today? What are the clearest crypto adoption trends you are seeing in that context? So show us like your vision maybe, what are the most important trends you're seeing, like maybe where we could be in 5 years? Who likes to start?
I don't
Wanna
mind.
go first?
So 5 years is a long time. If you look 5 years ago, it was 2020. We were still, I think, in the COVID era. So a lot has happened since then. And I think a lot will happen in the next 5 years. I think the big question is whether traditional finance will merge with crypto, in a sense that if tokenized securities really come on chain, and it becomes adopted and becomes big, then I guess we will see convergence with more traditional players. If not, I guess it will continue to be two separate worlds. So the big question is, will the traditional finance world come on chain? Because for sure, crypto will not go off chain. So let's see what happens.
Yeah. Cool. And that's probably the biggest driver we will have the moment TradFi comes on chain. This will be the point where literally the whole financial world out there is combined, TradFi and DeFi. And this is probably where we will end up, not necessarily in 2030, but maybe a few years later. Speed is not really predictable, but the future of our business and the TradFi business will be much closer. Like everyone is moving together, and everyone is literally, or everyone will literally offer TradFi, DeFi products, as we can see it already. But this will be the new normal in the future.
Exactly. Yeah, this is what I wanted to add, because let's say in 5, 6, 7 years time, or not all, but I see exchanges offer, traditional assets on chain, trading to happen on chain as well, maybe even for normal stock trading, more usability in a sense that you will be able to transfer traditional assets on chain and use, let's say, self-hosted wallets for that, and then use exchanges just to on-off ramp as required, exchanges to serve you in all asset classes, basically.
I recently heard somebody say on-chain is the new online, which kind of summarizes that. And today nobody's asking you if you're online, right? It's basically a given. So that might summarize that to some extent. I think from a retail perspective, I can envision a world where a significant portion of people will use a traditional crypto player as their primary financial account 5 years from now. I think that's something that's exciting.
Okay, thank you very much for your insights, and thanks dear audience for your engagement. And sorry for my voice blackout, but we made it. Hey, so thanks a lot, and join me for a big applause for our panelists, please.
Thanks, Ben.